Hello traders, Gary Wagner here, approximately 10:30 in Honolulu. It is the first day of November, Tuesday, and this is the daily report for gold and silver. On another roller coaster ride, we have the markets in terms of volatility all over the board. We had gold trading below 1,700 this morning. We'll talk about that in a bit. Currently trading down about $5 or $6, but well off the lows. We have silver trading lower this morning. It continues its downward swing at around 33.34. That's cash. We have the dollar trading higher again, and the equities markets, specifically the Standard & Poor's, under pressure. If a roller coaster ride had this many loops and spins, I think that many people would get sick on the ride. I can't put it any other way. First market I want to take a look at is the gold market. And what you're going to see with the gold market is quite interesting in that the low that it hit, 1681, which is right in here, this is our spot market. If you take a look at our 38% retracement, and of course traders, this retracement is from our record high at 1920 to the bottom of the correction, call it 1530. So you've got a $400 move, roughly $400 move. And when we consider that off that $400 move, you have a 38% retracement level, that's 1681. You have 1726, that's your 50%. 1772, that's 61%. And then lastly, 1624, that's a 23% retracement level. Now, traders, take a look at this. When we look at these different bands, there can be no doubt that when this market came down, it did in fact touch upon and find support, really strong support, at 1681. At the same time, when we consider the type of range that we've had today, it's been a pretty extreme range when you consider that we are currently trading very, very close to the open, as you can see by this small bodied candle that we have here. That is indicative of a market finding support and finding a tentative bottom in the market. And fundamentally, what we have going on with this potential referendum, with Greece, with the renewed interest in the fact that on paper we seem to have gotten some real headway with the European Union's debt crisis, when you look at the facts, it doesn't seem as clear-cut as first perceived. Now, traders, unlike the gold market that's actually, as I said, with this type of a candle right in here and the fact that it hit this 1681 and literally came off of it like a bat, when we look at the silver market, it doesn't seem as cut and dry. Now, let's go ahead and pull this up. This is going to be our cash silver. We did pull profits. We pulled profits at 33.90 and at 33, I believe, 25. Right around here is actually where we entered the market. We got out roughly 75 cents higher, so we pulled a small profit on that. But as you can see, my concern yesterday with that market was the fact that we were really trading below this 61% level. And I've got a couple of retracement areas. The first retracement area is really from $44 down to 26. And the second retracement area is the secondary record top, which is $50 down to this bottom at 26. And what I look for is basically what we call Fibonacci harmonics, or points in which those two different cycles seem to come together. And as I said, what's very important is this particular cycle, and the fact that we closed below it, to me, bode a bearish or ominous tone on the marketplace itself. Now, we had the same kind of a range in the market when we take a look at the silver market, but it is far below the open. As you can see right in here, it is still trading down on the day, and it is trading not only in response to the uncertainty, risk on, risk off, so to speak, but it is also trading lower because of the equities markets trading lower and the belief that the global economic turmoil that we have is likely to continue. Traders, we are looking at the Standard & Poor's. This is our daily chart. This is the Standard & Poor's 500. And as you can see, we talked about the fact yesterday that we had a pattern simply known as a three-river evening star. And actually today we've actually gotten our confirming candle. This would be a confirming candle. What I'm finding interesting on both this chart as well as our dollar chart, as you'll see, is that these gaps have come in which you have had this sharply lower open. The market opens, closes on the low, gaps, although it's a small gap, it gaps below that and is trading near the lows once again today. The reciprocal, the opposite of that, of course, is the dollar index. And so when we pull up the dollar index, we're seeing a gap again, this being a gap to the upside, right in here. Yesterday, we talked about the fact that the range on this particular market was so extreme. Look at that. The length of that body right in there. And then the market closes here, and look at this. You get this open and this large gap, this large price void in between these two prices as this market trades well off of the highs, but much higher. So traders, really, what are we looking at this point with all of this new information? And most importantly, the way we're interpreting this information. My sentiment right now is that gold has potentially found a bottom. You know, I think that push come to pull, push come to shove, so to speak, that even with the dollar trading higher, there is going to be those that believe gold is still the best safe haven asset. And as there is renewed interest in the marketplace about a potential referendum and all of the rumor mills that seem to be surfacing, realize we are far from being out of the water in resolving the European Union debt crisis. The fact that it came so eloquently on our cash chart, when you look at it, to that 31% retracement, let me go ahead and bring that up. As you can see right here, has traded off that, is still trading lower on the day. But unlike the Standard & Poor's, in which we had the three-river evening star, and then we get today really a confirming candle. You can see that right in here. When we look at silver, the same thing. We get that three-river evening star, and then we get our confirming candle here. On the dollar index, again, we get a three-river morning star variation. We have a star-like candle right in here, but it's not gap below it, but it is a variation in that the way I look at a variation anyways is that after a defined downtrend, we got that. You get a long down day, which you get, that's this red candle. You get a star-like candle, meaning a small-bodied candle, and then a large white day confirming candle, being another up day with a higher high and a higher low. That would be, of course, the three-river morning star variation. You get that. When you look at the gold market, of all of the other markets, you did not get that confirming candle. That confirming candle being a red candle, certainly not, with a lower low and a lower high. Well, you do get a lower low. You do get a lower high, but you are getting really what's known as an umbrella candle. An umbrella candle, simply put, is a hammer or hangman, shooting star, or inverted hammer. In this case, you are getting a hammer, and it is indicative of potential bottom action, coupled with the fact that the markets came to the support level of 38%. Bodes to the possibility that we have in fact found some kind of a bottom, and we certainly want to be looking at that to position ourselves on the long side in this market. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update, and bye-bye.